The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Happy Wednesday, everyone. Happy Hump Day. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Number to use if you want to give me a call, talk about this market. Hasn't changed. 877-927-6648. You can catch my program every day on TFNN from 3 to 4 Eastern. You can also get it as a podcast on iTunes, and don't forget you can listen to all TFNN programming on your smartphone. If you're out and around, plug those earbuds in, open up your smartphone browser. All you have to do is type in tfnn.mobi. You can listen to the stream that way as well. And if you want to look at charts live right along with me as I go over them on the show, you can use Tiger TV to do that. That is on the homepage of tfnn.com. You can also access Tiger TV on your smartphone, but if you are listening at your PC, the show is carried live on Channel 1. It is archived on Channel 13. Pretty impressive performance for the Dow Jones Industrial Average today. Taking a look at it in Tiger TV, only down about 3 points right now to 13,548. Not too bad considering that IBM is getting quite the haircut today, down 5.3% on a $1 billion with a B, $1 billion sales miss. Intel also under pressure after the company reported disappointing earnings. Shares of Intel down 2.3%. So you've got Intel and IBM acting pretty weak in the Dow, but the Dow has pretty much not given up any ground at all today. You see earlier this week the blue chip index found support at its 50-day moving average, so nothing really in the way of sell signals in the Dow. Checking in on the S&P 500 today, it is trading near its session high after hitting an intraday low of 1453. It is about 8 points higher than that. Not quite 8 points higher. Last trading at 1461. Up a little more than 6 points on the day. S&P 500 also finding support at its 50-day moving average. Volume today tracking a little bit higher than what we saw yesterday. Yesterday on the NASDAQ we had volume slightly above average, actually at 1.68 billion shares. We're tracking, maybe 3% higher than that right now. And volume on the New York Stock Exchange yesterday, average, but higher than Monday at 636 million shares. Today, we're tracking about 2% higher than that. So overall, not too bad a performance for the market today. I think it's too early to get real bearish here. Wrote a piece earlier today where again when you just look at all the stocks out there, how many have really broken down badly, and how many have not broken down at all. You still have a lot of stocks out there that are acting well and holding above support. So this market could have a little more left. That said, there are several tech names under pressure today. Let's take a look at Mellanox Technologies. They're going to be reporting earnings after the close today. We've been talking about Mellanox in recent shows. Fast-growing fabless chip designer based in Israel with unbelievably bright growth prospects. But this is a vulnerable-looking chart in terms of recent price and volume trends in the stock. Mellanox is dramatically underperforming the market today, down 6.5% to 98.07 last on Mellanox Technologies. The company supplies interconnect products for computing, storage, and communication applications. It's expected to earn $1.13 a share. That would be up 265% from a year ago. Sales up 125% to 153.1 million. Go back in July, the last time the company reported earnings, the day before it reported earnings, it was a $65 stock, and then it gapped up and was trading at $90, $95 the next day on just a blowout quarter and raised guidance. So interesting to see the stock acting vulnerable here. We'll see what Mellanox has to say after the close today. Salesforce doesn't report earnings until, I believe that they're not due until November sometime, but Salesforce under a lot of pressure today. You can see still holding above its 50-day moving average here. A lot of growth names have undercut the 50-day moving average in recent days, but not Salesforce. It has not broken down. It is under some selling pressure today, underperforming, down 2.4% to 151.73. And let's also take a look at Align, ALGN. You know, my 14-year-old boy just got his braces off, and he's got one of these Invisalign retainers. Pretty cool. Align is selling a lot of the Invisalign teeth straightening system. But look at the stock today, down 7.3% to 35.47, now trading below its 50-day moving average. No news that I could see. Might have missed it, but I do know they are reporting earnings. And earnings are, they're after the close actually today as well. Earnings up 7% from a year ago to 29 cents a share. Sales should be right around 140 million. That would be up 11% from a year ago. This is a stock headed into today that was, still under accumulation, holding above its 50-day moving average, but not looking too good today. Heavy volume in the stock. Looks like there are some big sellers in Align Technology ahead of earnings after the close. Another tech name under some pressure today, SolarWinds, SWI, fell below its 50-day moving average earlier this month, and it is underperforming dramatically, down close to 4%. Probably getting dragged down by these network, Fortinet network security name, and SourceFire also weak today. We'll talk about them in just a little bit, but shares of SolarWinds down almost 4% today to 52.06, quickly looking like a broken stock here. They report earnings next week, October 25th. EPS is supposed to be flat at 31 cents a share, with sales up 26% to 68 million. And one other tech name on my screen today that noticeably underperforming, potential resistance at the 50-day moving average, is LinkedIn, down $1.51, 1.4% to 109.67. Earnings here due on or around November 1st. Should see big top line and bottom line growth at LinkedIn. Sales should be right around 244 million. That would be up 75% from a year ago. And the online professional network should earn 11 cents a share, up 83% from a year ago. Taking a look at crude oil today, settles at $92.12 a barrel, up 3 cents earlier today. The EIA, the Energy Information Administration, reported a larger than expected increase in crude supplies. Last week, crude stocks rose by 2.9 million barrels. Wanted to show you a name that was brought up to me by one of my friends on Twitter, Bonanza Creek Energy, BCEI. Good follow through today after a heavy volume move yesterday. This is a small cap company based in Denver, oil and gas producer with outstanding fundamentals. It is small, it is on the speculative side, but a very bullish chart here. Stock is up another 55 cents today, 2.3% to 24.65. Take a look at a weekly chart for Bonanza Creek Energy, and we'll see the stock is still within buying range here after a base breakout swing point of 24.40, last trading at 24.66. So if you're buying right now, you're not buying a stock that's extended or that has run up too quickly in price. It's sitting just above that swing point. So Bonanza Creek Energy on the speculative side, but still brings a lot to the table in terms of fundamentals. They are supposed to earn $1.46 this year, and last year they earned 33 cents. So you're talking about huge annual earnings growth expected this year, and next year they're expected to earn $2.58. which would be up 77% from the $1.46 expected this year. In the second quarter, revenue was up 113% to $51.5 million. Earnings were up 158% to 31 cents a share. So a classic example of a company with pretty intriguing fundamentals, good growth prospects, and also a bullish chart. So in the oil and gas space, Bonanza Creek Energy looking pretty strong here. Taking a look at the GLD, the Spider Gold Trust. How is gold doing today? The GLD up 12 cents to 169.54. Gold for December delivery rose $6.70 today. 0.4%, settled at $1,753 an ounce. U.S. dollar index under a lot of pressure today. I want to go ahead and take a look at the U.S. dollar index here, because I think stock market bulls have reason to be encouraged by how this weekly chart looks here. U.S. dollar index right now trading at 79.03, down 38 ticks on the day. It closed, let's see here. Yeah, closed Tuesday at 79.40. So you see the U.S. dollar index on the weekly chart still sitting underneath some key resistance levels here. It's 10-week moving average, it's 40-week moving average, some significant near-term resistance that the dollar index is going to have to get through. Now, that said, it does have some recent lows here, 78.60. It's not that far away from, only about 40, 50 ticks or so, and another recent low out here at 78.10. So, a break below the 78.60, 78.10 level would certainly be bearish for the U.S. dollar. And again, selling in the dollar could bring more buyers into the market between now and the end of the year. So, if the dollar continues to weaken, which the chart tells me there's a chance of that happening, could be good news for market bulls. M&A news today. Let's take a look at ASML Holding, based in Amsterdam. Stock under a lot of pressure today, down 6.3% to 50.23, sitting right at its 200-day moving average. Not a leading stock by any means, but earlier today they announced plans to buy Cymer, CYMI, for around $2.5 billion. ASML is a big supplier of equipment to chip makers like Intel, Samsung, Taiwan Semiconductor. Cymer has technology that makes beams of light that basically trace out the circuits of computer chips. Now, Cymer got a nice premium. We'll see shares of Cymer today up close to 50% on the day to 71.70. And we'll see if this M&A news did anything to help the Philadelphia Semiconductor Index as we go into our first break. It is basically unchanged on the day at 380.25 after hitting an intraday low of 376.26. All right, folks, stick with me. Breakout Investing on TFNN. Ken Shreve with you. We will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Checking in on shares of Apple today. Holding yesterday's big gain, not doing much today, down $1.15, 0.2% to 648.64. Apple yesterday scheduled a press event for October 23rd, where it's widely expected to introduce a smaller version of the iPad. Some say a cost of $199 to $299. Some say it could go as high as $399. We'll get more specifics from Apple on October 23rd about the iPad mini, and of course earnings due October 25th for Apple. Apple has missed the consensus earnings estimate 2 times in the past 4 reported quarters. So we'll see what Apple has to say when they report earnings on October 25th. In IPO news, White Wave Foods, not trading yet, but they did announce terms for its upcoming IPO today. Not sure when it's going to price, but it should be soon. It will trade under the ticker symbol WWAV. This is a spinoff from Dean Foods, organic dairy spinoff. It is plans to raise $300 million by offering 20 million shares at a price range of 14 to 16. And let's check in on a couple of high-flying IPOs here. Workday, cloud-based provider of enterprise management solutions, hasn't gone down since it came public 3 or 4 days ago. Up another $4.09 today, 7.8% to $56.25. So tremendous debut for shares of Workday. And also Realogy, RLGY. Realogy is the parent company of residential real estate brokerages like Century 21, Coldwell Banker, Sotheby's International. Realogy has been another fine performer. Its fifth day of being a publicly traded company, shares up another 4.8% today to $37.46. Big economic headline today. Housing starts. In fact, when I talk about this one, and I pull up the ITB because home builders are outperforming again today. Shares of the iShares Dow Jones U.S. Home Construction Index Fund up 3.1% to 2066. Earlier today, housing starts accelerated 15% in September to an annual rate of 872,000 units from a revised 758,000 in August. Okay, so the number was 872,000. The consensus estimate 768. So it was more than 100,000 units above expectations. No wonder the home builders are catching renewed buying interest today. Housing starts at the highest level since July 2008. Building permits also hit a multi-year high, rising 11.6% from August to an annual rate of 894,000. The estimate was 815,000. So really nice numbers from the Commerce Department earlier today. When you take a look at the ITB, it had a breakout in June over $16 a share. Here was its initial breakout, comes down to its 50-day moving average, breaks out again, coming down to the 50-day moving average. You kind of feel like you're, chasing this just a little bit, but then again, it's under accumulation, and its relative price strength just can't be ignored. So home builders continue to do very, very well here. Let's take a look at Pulte Group, PHM. I think I have a weekly chart here, but let's take a look at shares of Pulte Group from a daily perspective. Gap up for the stock today, up 5.6% to $17.48. Take a look at a weekly here. Pulte Group, there it is. And you can see a stock that initially broke out here in the summertime and just kind of rode its 10-week moving average higher. This is probably the second pullback to the 10-week moving average after a breakout. So I don't have a problem buying a stock. Well, first and foremost, when it breaks out of a consolidation area, that's often a good time to buy. Even when it pulls back to the 10-week moving average for the first time, you can still buy if you miss the breakout, but maybe just start with a little smaller position. After the second pullback to the 10-week moving average, it's already made a big run. It's a little more riskier buy, but I remember the folks over at IBD when I worked there for 12 years, they said, you can buy the second pullback to the 10-week moving average, but you should make it in even smaller positions. So home builders very tough to play here. The data look good. They have been running for quite some. They've been running basically since the summertime. So Pulte Group looking pretty strong here, and also Ryland Group, similar situation. Stock today up 4.5% to $32.43. No signals, no sell signals at all in the home building group. Not obvious buys at this time, but hey, they could have more left. Stick with me, folks. We're coming back in 4 minutes. Nice long segment coming up. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back. Ken Shreve with you. Breakout Investing on TFNN. Major averages are all now green with about 25 minutes left to go in Wednesday's session. The Dow up fractionally to 13,552. The S&P 500 up a little more than 6 points, 0.4% to 1461. Tech stocks kind of lackluster performance, up a little more than 3 points, 0.1% to 3104. The folks over at Investors Business Daily released the latest 2012 presidential election daily tracking poll. After the debate last night, President Obama now leads Governor Romney by 46.8% for Obama. Romney is at 45.3%. Romney did hold his ground among independents, clinging to a 45% to 40% lead. This is an interesting poll. It breaks it down by region. In the Northeast, Obama has a big lead, 54% to 37%, but in the South, Romney has the advantage, 50% to 43%. Pretty much a dead heat in the Midwest, and in the West, Obama is up 49% to 44%. So that is a daily poll put out by the folks over at Investors Business Daily and their polling partner Technometric. I believe they're based in Washington, D.C. All right, headed into, before we got into the last break, talked about that great housing start building permit data for September. Let's take a look at some earnings reports today. Not much good news. I mean, some good news, but let's check in on shares of Ford. Really getting hammered today. This is a maker of network security hardware and software. Stock is down close to 20%, loses 1/5 of its value in one day, down to 19.92. Earnings at Fortinet in line at 14 cents a share, up 8% from a year ago. Sales up 17% to 136.4 million. That was also in line with expectations. Other security stocks riding, or I should say getting dragged down by Fortinet. Here's a look at Source Fire, FIRE. Stock is under a lot of pressure itself, down 12% today to 42.07. And there was another earnings report in the security space. That would be Checkpoint Software Technologies. This stock also getting creamed, down 13% to 41.33. So, security names very, very weak today. Mentioned IBM. I mean, the Dow's performance today really impressive, considering that shares of IBM are down a little more than 5% to $200.31. I mean, this was an earnings report that clearly surprised the market. IBM gaps below its 50-day moving average. Should see the 200-day moving average here at 197 thereabouts. Could be a support level. But IBM under a lot of pressure today. Janney Capital Markets downgraded IBM due to, among other things, poor execution in the services area. And again, I mentioned earlier, it was a big revenue miss. Expectation was for revenue of $25.7 billion. They came in at $24.7 billion, down 5% from a year ago. Earnings were up 10% to $3.62 a share, mostly in line with expectations. So IBM still trading in the bottom half of its trading range today, even as the market rallies back here. Intel trading up near its high after early weakness. Earnings here down 13% from a year ago to 60 cents a share. Sales down 5% to $13.46 billion. Another Dow component under pressure today. And let's check in on shares of Intuitive Surgical. Wild, I mean, just wild trading in this name. How do you handle a stock like this? I remember I was just about to, go off the air yesterday, and ISRG was up $20 in heavy volume. See the big move it made yesterday. Company comes out with earnings, and then it's down $25-30. Today it hits an intraday high of 544.21 and a low of 510. So what's that? A $34 intraday price range. Right now it is down 45 cents on the day to 532.68. A lot of question marks about its earnings report. Earnings up 16% to $3.54 a share. That beat views by 4 cents. Sales up 20% to $537.8 million, but that was just slightly above expectations. I think investors were definitely got used to big beats from ISRG on the bottom line and top line. Not so much the case this time around. The company said it sold 155 Da Vinci robotic surgical systems in the quarter, but surgical procedures performed using the system rose 22% from a year ago. That figure was lower than ISRG initially forecast. So they cited economic conditions in Europe, not so great, and also changes in prostate cancer treatment were the cause for reduced Da Vinci system use. Coming up tomorrow, we've got earnings from Bank of America. Let's check in on BAC here, down a penny to $9.45 a share. I wanted to show you a weekly chart of Bank of America because, listen, I realize that good technical setups don't mean a whole lot headed into earnings, but this is a good technical setup. It's a bullish chart. Clearly, the market is optimistic about some decent earnings from Bank of America. Then again, IBM's chart looked pretty good as well. So we'll see what Bank of America has to say tomorrow when it reports earnings. They are expected to earn, wait, I'm sorry. I think B of A came out with, B of A reported earnings earlier today. They don't come out tomorrow. They already reported. So Bank of America today earned a penny a share, down 98% from a year ago. Sales down 28% to $24.5 billion. So decent technical setup here. Doesn't seem to me to be an overly friendly environment right now for technical breakouts. You're not seeing a whole lot of them. Not surprising because there's still, uncertainty in the market. Market is trying to recover from some pretty serious selling in recent days, and we're still early in the early stages of a rally attempt here. Day 3 of a rally attempt for the S&P 500 and NASDAQ. I believe it's day 4 for the Dow Jones Industrials average. So it's possible tomorrow, if we see a big percentage gain in higher volume, maybe we see one tomorrow, maybe we see one Friday, maybe we see one next week. One more sign of strength by the major averages would make me feel better that this new rally could have some more legs. But Bank of America still in a pretty decent technical setup here, keeping an eye on this one for a breakout over a swing point of 979. Another earnings report in the financial sector today, U.S. Bancorp. One of the cleaner balance sheets, no doubt about it, in the financial space. U.S. Bancorp today up 58 cents, 1.7%, to $34.19. Definitely some big sellers in this stock over the past couple of weeks, but the stock is rebounding nicely. Earnings were up 16% from a year ago to 74 cents a share. Sales were up 5% to $5.6 billion. Very little in the way of blips and missteps for U.S. Bancorp in recent quarters. Just good, consistent growth. And again, one of the better run financials out there, I would say. After the close today, let's check in on shares of eBay, see how it's looking ahead of earnings. Looking a little iffy. It's broke below its 50-day moving average, tried to rally back above it, failed. It is now back above the line, but shares underperforming today, down 30 cents to $47.94. A lot of optimism about what the company is going to say after the close, especially about its PayPal unit, which continues to be really the main growth driver for the company. EPS expected to come in at 55 cents a share for eBay, up 15% from a year ago. Sales also up 15% to $3.4 billion. And let's see. Also going to hear from Google later in the week. Google reports earnings on Thursday. Another strong stock here. It is outperforming nicely today, up $10.94, 1.5% to $755.64, still holding comfortably above its 50-day moving average here at 710. But numbers at Google, a lot of optimism about this earnings report as well. Earnings should be up 10% to $10.65 a share. Sales, including, not excluding, but including traffic and acquisition costs, up big, up 59% to $11.9 billion. So eBay after the close and Google Thursday after the close, two tech heavyweights that could have good news for the market. Thinly traded Manhattan Associates, MANH. This is a supply chain software firm. Nice gap up for the stock today, trading near its session low, but still up 4.3% to $61.87. Bottom line growth pretty good, up 12% to 75 cents a share. Sales were also up 12% to 95.8 million. Thinly traded stock here, average daily volume of only 120,000 shares, but in a decent technical setup before the earnings. Anytime a stock gaps up, you'd never like to see a close near the low. It just tells you that sellers were in the stock. Normally when a stock gaps up, it's indicative of very, very strong buying demand, and if it's truly strong buying demand, the stock will normally finish near its high. So you're seeing a lot of gaps up recently that are being sold, sort of the kind of the way of the market in recent weeks, but Manhattan Associates doing the same thing today after early strength. It is down near its session low, but still good day of solid performance. Checking in on shares of Whirlpool as well, WHR. Earnings due October 23rd for the company. Looking pretty good here. Another bullish chart in the market, trying to make progress after a recent breakout over 86.47. Still within buying range here. It recently trading around 87.18, up 2.75%. Lackluster growth is expected when the company reports on October 23rd, but a decent technical setup here. In fact, let me just go ahead and pull up a weekly chart here, and then I'll switch it over to WHR. And yeah, we'll see that the stock recently came out of a base, broke out over 75. And, so the swing point, probably 75, a little over 75. It's now trading at 87.16. So you see this different perspective here shows me the stock is a little bit extended here. Likely support level would be its 10-week moving average at 81. So we'll see what Whirlpool has to say on October 23rd. And also on the earnings front, this is an excellent company, fast-growing, for some reason just not getting the respect of Wall Street. Know a lot of people that like this stock, but it's still about 18-20% off its high. United Rentals, they provide construction and industrial equipment rentals. You look back at recent quarters, and boy, growth is really robust. This time around, sales up 71% from a year ago to $1.2 billion. Earnings were up 47%. Big day for the stock today, up 15% to $39.03, and they sounded pretty bullish about demand. So this is an example of a good earnings report today. United Rentals benefiting as a result. Now, for the full year, they made $1.88 last year in 2011. This year, they're supposed to make $3.06. That would be an increase of 63% from 2011. Next year, they're supposed to earn $4.65, which would be up 52% from 2012. So URI benefiting from a strong earnings report. And then let's check in again on FBHS. This is an interesting company here. They are a provider of home security, kitchen and bath, tool storage products. Some of its brands include Master Lock and Moen Faucets. Another company coming up with earnings October 23rd. Like the look of Fortune Brands Home and Security here. Good technical setup. Stock is up another 3.2% today to 28.78. It is, working on its sixth win in a row, approaching some resistance here at 29, acting very well ahead of earnings on October 23rd. Folks, don't forget about the Great Panther Silver Halloween giveaway. I know I've been mentioning that in recent shows this week. October 29th, 30th, and 31st, between 9 a.m. and 6 p.m. Eastern, TFNN and Great Panther Silver will be giving away 27 pieces of silver, October 29th and 30th, giving away a half-ounce piece of silver, and October 31st will be a full 1-ounce silver piece. So you can register for free right on the homepage of TFNN.com. Check out 30 days free of Ultimate Growth Stocks, my newsletter. Just click on the Newsletters tab on the homepage, then click on Investment Newsletters. 30 days free of Ultimate Growth Stocks. We'll wrap things up when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
5 minutes left to go in Wednesday's session. We have the Dow now slightly negative, hardly, not at all though, down 2 points to 13,549. S&P 500 outperforming nicely today, up 5.5 points to 1460, and the Nasdaq holding on to a small gain here, up a little more than 2 points to 3103. I think it's still too early to get bearish on this market. We are 3 days into a rally attempt now for the Nasdaq Composite and S&P 500. Tomorrow, Thursday, would be the first day we could see some legitimate follow-through. By legitimate follow-through, talking about a big percentage gain, maybe at least 1.5% in the major averages. Want to see volume come in higher than the prior session, so a little conviction behind the buying. And if that happens, I'd be more eager to put money to work. It would be a sign that the market trend possibly is ready to turn upward again. Just because you get a follow-through day, whether it happens tomorrow or Friday or sometime next week, or it may not happen. But if it happens, it doesn't give you carte blanche to just kind of move all in with reckless abandon, but it's a sign that the market trend may be ready to turn higher, so it makes sense to nibble and swim with the market tide. So we'll see we'll see if we can get some follow-through in the major averages. Before we went into the last break, I just mentioned quickly the 30-day free trial to Ultimate Growth Stocks. It's a weekly newsletter. It is published every Tuesday, an extensive weekly update, and then in between I send out email buy and sell alerts for the model portfolio. And if I'm not doing any buying or selling, sometimes I'll send out market updates in between the Tuesday weekly update just to keep subscribers abreast of what is happening. And basically, it's a growth stock newsletter, so I use a combination of fundamental and technical analysis when evaluating a stock. I do like relative price strength. I tend to target the strongest price performers in an industry group, not the weak ones. I don't try to buy low and sell high, which I know is common practice on Wall Street. What I try to do is buy high and sell higher, because when I'm buying high, I'm typically buying companies that are executing, firing on all cylinders, in many cases are still in the early stages of growth, and so that's generally how I go about doing things. I'm a top-down investor, meaning that if the market is telling me to stay on the sidelines because of distribution, because of institutional selling, that's where I am. I don't believe in buying stocks on the way down during market downtrends, during bear markets. When market conditions start to deteriorate, I simply will sell, move to the sidelines, and just raise cash and be just protect capital. Institutional sponsorship is also important to me. Typically, growth fund managers, when they buy a stock, they like to see growth. They like to see an innovative product or service. And typically, companies like this are younger companies. They're not companies that have been in business for 50, 75, 100 years. They're newer companies. So, a name like Workday that we talked about, WDAY. I mean, it's only been trading for 3 or 4 days. I'd like to see this one settle down. I'd like to see it consolidate. But that one clearly has the potential. Still very early. But it has the potential to be a market leader, and so younger companies are perfectly fine. But you have to buy them at the right time. You can't chase them. You want to get them in the early stages of a price move. So I'm not averse to owning IPOs, especially if they're in the early stages of breaking out from a bullish first stage or second stage base. Want to check in on shares of American Express. Why don't we do that? Because they're reporting earnings after the close. We'll see AXP hanging in there, looking pretty good for a possible breakout here, up 1.2% to 59.31. They report earnings after the close. Have a great afternoon, everyone. I'll see you back here tomorrow. Take care.